Hey everybody, Brian Shannon here from alphatrends.net. It's Friday, October 4th, 2024. I hope you had a good week in the market. It was kind of mixed bag here, but equities, I think, are behaving well. We've been cautious and the light has turned yellow, maybe back to green here. Let's take a look at the action. You can see S&P is only 30 basis points off of the all-time high. Financials, less than 0.5%. The Dow, less than 1%. So we've got a lot of strength out there. Hardest hit this week were the cryptos, but they had a nice bounce back. The bonds got hit pretty hard, while oil really had a big week. So let's take a look at these charts. First, I want to mention, once again, I mentioned on Wednesday, I've started a new service on Twitter. And for $10 a month, you just go to twitter.com/alphatrends. You'll see this pink subscribe button. And what you get there is for $10 a month, you'll get daily updates intraday. So you can hear, I did a video midday today, update on NVIDIA and just a couple other things. I intend to make it a high amount of value, especially for what you're paying $10 per month. So hope to see you there. Let's take a look at the SPY. We've been cautious, but we haven't been bearish. We've been holding above this prior band of resistance. We tested it. We've been holding above the 20-day moving average, the 50-day moving average, the 200-day moving average. Just because we're below a declining 5-day moving average on the shorter term time frame does not mean we sell short. It means we're cautious. I was very clear about that all week. We held the anchor from this low right here, and that was tested numerous times. The sellers weren't able to gain control, so instead we saw a strong push higher. This is buying strength after the dip. I was saying don't buy the dip. What does buying strength after the dip mean? It doesn't mean chase the market on a gap, and it doesn't mean buy it on the first push beyond the volume weighted average price, but maybe over here because then you have a higher low. Maybe over here after it breaks below it. So the point is you should be long the S&P 500 at this point because the buyers are back in control. Your worst case stop should be under here. If it breaks below that level, well, then it invalidates this entire breakout and opens the way for a push lower, maybe down towards the 50-day moving average. There's nothing to suggest that this breakout is going to fail. In fact, it's time to be long. The NASDAQ also reversed course here, and I was a little less enthusiastic about the opportunity for the NASDAQ to reverse because we were below this prior band of resistance. But I'm not going to change. I'm not going to stick to cautious if the market breaks back above that 5-day moving average and makes a higher high above it. So now I think if you're long the NASDAQ from an intermediate term perspective, your worst case stop goes under here. If you're a shorter term trader, put your stop underneath one of these higher lows that makes sense to you for your time frame. Everything I talk about at Alpha Trends is designed for swing trading. I realize that not everyone's a swing trader, and I'm not trying to be all things to all people. I'm not trying to encourage day trading, and I'm not a great longer term investor, so I don't talk about that. My specialty is swing trading. For the Russell 2000, we held the anchor from this gap over here, which is kind of interesting, and that 50-day moving average, the blue line right there, and the rising 20-day moving average. We're still not there yet, though, in terms of a low-risk purchase. We're still trading in this downward channel with lower highs and lower lows and a declining 5-day moving average kind of in the middle of it. So next week, if we, I'd love to see it kind of do a little bit of this, but it's possible instead we get a gap higher up here. And then I think you have to look at it and say, don't chase the gap, wait for VWAP on a shorter time frame, be involved on the long side, and maybe your stop goes underneath today's low. That could be the important low. Or if you want to give it more room, well, then certainly the low of this week right here that we saw on Thursday, that would be your absolute worst case stop. If it breaks back below there, then I think you've got bigger issues. But as we've mentioned over and over again, the weekly chart, it's in a stage 2 uptrend. It's just been that it's super choppy on the shorter term time frame and hasn't been the best trading vehicle. I am actually considering, I said it last week that I was considering getting involved long, but didn't get involved long because we still made these lower highs and had that declining 5-day moving average. So far, for me, the position is still cash. Don't buy the dip, wait for strength after the dip. Semiconductors, these guys held at the 20-day moving average, 50-day moving average, and the anchor off of the all-time high here. also above the anchor from the August 5th low. We've got a rising 200-day moving average. And what led the way, of course, is the most important component in there, and that is the shares of NVIDIA, which continue to trace out this inverted head and shoulders pattern that we've spoken about. We made a higher high down in here at the conjunction of the 20-day moving average, 50-day moving average, and the anchor off of the August 5th low. The buyers are in control. Yesterday it gapped up. It was tough to be a buyer in that situation. But today, as I pointed out in Twitter Premium right here, that was a good place to be a buyer. And with a stop under here, if you're day trading it, under here, here, or here for a swing trade. Bottom line is the buyers are back in control for NVIDIA, and it's their game to lose. If you're a seller of this stock, you're on the wrong side of it right now, because we're above a rising 20, 50, 200-day moving average, and the correction that began after this peak seems to now be over. The buyers are gaining control. A break beyond here, you don't want to be a buyer above there. You want to be a buyer in here and manage risk as always. Biotech stocks, I want to be long these things. I like the weekly chart. I love the way that it's set up here for this move up towards 120. And as I've navigated through, I've pointed out, I was long here, sold some, sold the rest, and I've been in cash still, and I remain in cash, still below that original purchase of 98.50 over here, and locked in that gain, no reason to be an owner. Here's what I'm hoping we can do early next week, is that we hold here. This is the anchor off of this low. That is right here. That's that purple line. We've got this trend line off the year low, but we've got a 20 and 50-day moving average overhead. So if I buy this, it's not going to be my full-size position for the biotechs, but I'll still look to get involved long, because if it can do this and be a buyer over here with a stop under a higher low that might look like this, we would see the 5-day moving average come down and start to flatten out like this and start to rise, and we want to buy strength above that. So far, dip buyers have been punished. They, the average price since it made this peak over here is now at $99, and here we are, $1.50 lower than that at $97.51. So don't buy the dip. Wait for strength after the dip to be a buyer. You won't catch the bottom, but you won't think that this is the bottom and then experience this. You won't think this is the bottom and then spit it out down here when it doesn't. Trust the direction of the 5-day moving average and look at it and say, while it's declining, it's guilty until proven innocent, and then look to the left and say, what could change that? This is where we were 5 days ago. So on Monday, if we rally, what's going to happen to that 5-day moving average? It's still going to decline. If we rally up to the anchor from the peak, I would expect we would pull back from there, and then your better purchase would be over here. It would be a better purchase because we'd be buying strength rather than looking for the buy as it pulls back straight down through the top of my bald head there. The financial stocks continue to behave well. As mentioned, they're just I think it was less than 1% from their all-time high. So I don't trade them. If you're long, know what the definition of trend is: higher highs and higher lows. These are your most important, relevant higher lows. As mentioned, the bonds really failed to materialize in here. They were looking like they were going to hold the 50-day moving average in there and the anchor from this low. Instead, they gapped down on Wednesday. They continued lower on Thursday. They continued lower again today. They're below a declining 5-day moving average. In the intermediate term, there's no point trying to buy them. They're guilty until proven innocent. So leave the bonds alone for now. Let's take a look at energy, because that had a big week. And as I've been saying, it's been guilty till proven innocent. Well, it takes some bombs to change that, I guess. I was hoping maybe for subscribers that it would pull back like this today. I don't trade energy names, so I feel zero FOMO missing out on this. To me, things that trade based on global macro things and commodities, I find them much more difficult to manage risk, so they don't suit my personality. It doesn't mean they're not good trades for you if that's what you make your money with, But it's always about what's knowing best for you. If you don't trade the financials well, if you don't trade the energy names well, then you don't trade them. That's, you don't have to listen and do what everyone else does. There's a real sense of freedom and lack of FOMO that comes from having an approach and knowing your time frame, your risk tolerance, and knowing that you have confidence in your approach. That's what I teach Alpha Trends members every day, is a strategy that they can repeat over and over again in different markets. And guess what? You're going to miss moves sometimes. That's just part of the game. No one's going to get every move. And you can't look at it and say woulda, shoulda, coulda. You have to look at it and say, well, you know what? That's not on my radar. If cocoa beans doubled this week, would you care? No, because you don't trade cocoa beans. So you have to look at it from those perspectives. I meant to take a look right here because this actually shows us, and this is the TradingView script. If you want access to that, guess what? You can have access to that if you pay $10 and sign up for the Twitter premium subscription. So again, go to twitter.com/alphatrends. Anyways, this look gives us that it's just the 5-day moving average, and it's that anchor off of the September 11th low. We can see here on the semis, it held over and over again, as did the NASDAQ and even the semiconductors over here. But the biotechs, they've still got that declining 5-day moving average and they're below it, so it's colored red, meaning stay away. Right now, we've just turned green in the S&P. We've just turned green in the NASDAQ. So it's not necessarily a buy signal, but it's a quick, easy way to look at the market. Let's look at Bitcoin. What happened there? How do we, let's see. I guess that the Bitcoin chart, I can talk about Bitcoin because, as I mentioned, I bought it at 64.20 and sold it today sold half of what I purchased for a gain of 17.50. Unfortunately, the Bitcoin chart isn't working for whatever reason. So what I will do is, for Alpha Trends members and Twitter subscription people, I will do a special video about Bitcoin. I'll also include, let's see, Ethereum and Solana as well. Anyways, that'll do it for now. Have a good weekend.